So I had Patrick Quinton from Dweller come on the show and do an interview. By the end of this video, you're going to understand more about accessory dwelling units and their potential rental income, more about ground leases in residential properties, more about crowdfunding opportunities, and you're just going to know a lot more about how people are applying new ideas and some old ideas to solving the housing crisis on the West Coast and maybe around the country one day. So, without further ado, here's the pro, Patrick Quinton from Dweller.
Thanks, Ryan. Happy to be here and share the news.
So I think, do you mind introducing yourself first for anybody who's watching How to ADU, just so they know who is Patrick Quinton, what is Dweller?
Yeah, so my name is Patrick Quinton. I am the CEO and co-founder of Dweller. We're an ADU development company based in Portland, Oregon, and our goal as a company is to expand the development of ADUs both here in our own market and hopefully around the country. And we do that by making ADUs more affordable and accessible for homeowners.
And you've been working on this challenge for a while, right? Don't sell yourself short.
Yeah, I mean, so my background prior to Dweller was managing the development authority for the city of Portland, and so certainly have been thinking about the housing crisis and the challenges of adding to housing supply here. And then I left that job, and about now 3 years ago, my business partner and I set up Dweller to try and tackle one aspect of the housing supply. And so it is, there's a reason why we're not building enough housing, and the ADU market is a microcosm of that challenge. You have to not only get through zoning and legal hurdles that I think have largely fallen away, but then you have obviously finance challenges and other things. So it's a market that has a lot of promise for adding housing supply, but there is a reason why we haven't built more ADUs so far.
Yeah. So you're all about adding to that housing supply.
Mhm.
You see ADUs as a really powerful tool there, but what are the challenges that face ADUs in Portland in particular?
Yeah, so and people who have been following the ADU, or maybe even new to ADUs, but are researching it, might think that we're still in an environment in which ADUs aren't legal in most places, and it's hard to get an ADU permitted. And while we certainly don't want to kind of minimize the development process, particularly on the West Coast, those hurdles have largely fallen away. We've had tremendous progress by the state legislatures on the West Coast, in particularly California, just done amazing work in passing state laws that have preempted all the local restrictions on developing an ADU. So, in theory, any residential homeowner should be able to develop an ADU. So why aren't more being built? Well, first off, ADUs are really expensive still. The average ADU here in Portland is over $200,000. In California, and to the north of us in Seattle, those probably north of $300,000. So that's just not something that's accessible for most homeowners. And then the process, is still complicated. The ADU development requires homeowners to become, kind of one-time developers and acquire all this expertise that they may never use again. And so that's not a scalable part of the process. And then the big one, which is out there, is financing. So right now, most ADUs are built by homeowners who have substantial equity in their residential property, and so they're able to cash in some of that equity and pay this high price for an ADU. That certainly will be part of the market for a while, but we know statistically that the vast majority of homeowners aren't sitting on that much home equity, and we also know that not a lot of homeowners want to cash in that equity. This is their life savings in many cases. So we don't see that there is consistent financing available for the majority of homeowners who want to develop an ADU. and um, and I think that's going to be the hardest hurdle to really get past, is because it does require new products, but it also requires more fundamental change in how we finance residential properties. There's kind of a big system in place that everybody who's doing it likes it because it works, but for those who weren't able to access financing, it actually doesn't really work.
Yeah. So it sounds a little like two challenges, right? You're saying like learning how to be a developer just to do it once,
Yeah,
and then actually accessing the funds. Because even if you do have that much equity, it's not like it's sitting around in a cash account somewhere.
correct. Yeah,
And so there's all kinds of different challenges, whether you're low credit or whether you have the equity, but it's hard to free it up and spend it. And that kind of dual challenge is interesting, because I feel like the campaign that we're here to talk about today, it's super exciting, but it almost has two parts too. You have to teach people both about the dweller concept of these ground leases that solves the development issue, and the finance side, which is this crowdfunding piece.
yeah.
Which order do you want to tackle these two huge questions in?
Well, we can tackle them in that order.
Cool.
These are kind of different. I think they're maybe somewhat different audiences for the two, but happy to kind of walk through each of those steps. You want
Yeah.
me to dive into the ground
Yeah.
lease?
So
Yeah,
yeah, how does Dweller solve some of the development challenges for homeowners who are like, I want one of these, but
yeah,
like, where do I start? How do I develop my property?
yeah. Um, so what we've developed as a business model was we said a couple things. One, let's treat ADUs like other consumer products, if you will. That's not meant to be a negative term. Let's treat them like other consumer products, meaning a homeowner can go and buy it, and they don't have to learn how it's built. They don't have to get into the inner workings of it. So we do turnkey, what we call turnkey ADU development. So homeowner signs an agreement with us, and they're not really expected to do much else. It's not as straightforward as that, but compared to the typical ADU process, it is pretty straightforward in that we view our job is to be the experts in developing an ADU, and the homeowner's job is make their land available, right? So that's really the way that we do it. And a couple of the highlights are, we rely entirely on prefab construction, so we're bringing in factory built ADUs. So that saves on the on-site construction time. We really kind of shorten that period, so we really aren't disrupting the homeowner's life, and the homeowner be involved in that part of the process, right? There's no input they can have in the factory, right? So in some respects, it does turn it into more of a consumer product. Just and so basically, we can put an ADU on someone's property and not really have them learn anything additional about that process. The ground lease takes it a step further in that the ground lease, let me just quickly explain. The ground lease is dweller coming in and saying to a homeowner, we want to lease a part of your property, the vacant part of your property, not your house. And on that part of the property, we want to build an ADU, and we'll take responsibility not just for building the ADU, but we'll take responsibility for paying for the ADU. So we then own the ADU, and we manage it. It operates as a long-term rental. We find tenants, they pay rent, we share a part of the rent back to the homeowner, so they get income off of that property. And then we use the remainder to kind of pay our costs and pay ourselves back. So the homeowner, so we extend this kind of turnkey solution into, not only do you not have to develop it and learn that, but you don't have to manage it, and you just get a check every month. And in some cases, you can build an ADU, and depending on how you finance it, you may not kind of have positive cash flow on that for a while. We guarantee it's positive cash flow. So in that respect, it creates this total solution for homeowners. And what they really are saying is, here's my backyard. You do all the work, and then I get a check every month, and then down the road, the homeowner has the right to buy us out, meaning the homeowner can buy the ADU from us. And at the end of the day, even though homeowners don't want all this hassle, and they don't, maybe don't want to put their money at risk up front, most homeowners are making a decision to put an ADU in their property to either put a family member there at some point in the future, or to control it as a rental so that they can realize all the income. And so they view us as a temporary solution, maybe 3 5 years temporary, but as a temporary solution to get them to their end goal, which is to have an ADU on their property that can serve one of those two purposes.
That's really great. And so it solves kind of all those development issues. And then this, if you're not if you don't have a real estate background, this can sound really complicated, right?
Yeah.
Can you talk a bit about how this process is already being used by either commercial developers or in any other parts of the economy where you're like, actually, you've probably been in ground lease buildings before?
Yeah. So, a lease, everyone can kind of relate to a lease, right? So, lease is, you have a property owner and a tenant, and the tenant is paying something every month to the property owner for the use of that. That's the way people rent apartments. People, stores rent commercial spaces, but ground leases are a particular type of lease in which a landowner, vacant land, is able to say, you know what, I don't want to take the development risk, meaning I don't want to find money and take the risk of building whatever on the property. It could be housing, it could be a commercial, it could be industrial building. So I'm going to retain ownership of my land, but I'm going to go find someone else to develop it, and then they're going to lease the property from me, and they're going to pay me some amount every month, and they can develop something on it. And so, it varies by jurisdiction, but in many parts of the country, even the world, big commercial building, like the city of New York, Manhattan has a lot of properties, commercial properties. Times Square has, in particular, were actually owned by the city of New York. They were taken back many years ago when the city was really depressed, and they never sold the land. So, from a user perspective, it doesn't matter. Like, you don't know, you don't really care who owns the land versus who owns the building. We assume it is the same, but doesn't have to be the case. And so we've just applied this to a residential concept to a very small scale. So, the backyard is unused. It's basically a vacant piece of land that has value, and we're turning that into value for the homeowner without the homeowner having to take the risk of doing this. And just to make it clear, we have a portfolio of ADUs that we've done this way. So in Portland, we own ADUs, we manage them, we collect rent, we pay the rent back to the homeowner. So not only is it a concept that's been used elsewhere in other real estate transactions, we've done it. I mean, we know it works because we're doing it right now.
And that's a great segue. So you've got a profitable portfolio of these ADUs that you've developed with ground leases that you're already currently renting out. And that's part of what this campaign on small change is offering, right?
Yeah. So I mean, we can jump into the campaign just to spin it, but obviously, if we're in the business of leasing people's property and building ADUs, then then we need to raise money, obviously, to pay for those development costs. We need to make the investment up front to collect it. And this is a relatively new concept, so it's not the kind of thing that it's the easiest conversation to have with traditional lenders and investors. But we know that because we hear from people all the time, there's strong support for ADUs as part of the housing solution, and we know that a lot of people say, "Hey, I wish I could, help you build more ADUs, even though I don't have place on my property." And so we've known that for a long time that it was well suited for a crowdfunding campaign. So we've created a campaign to raise money to build more ADUs in Portland under these ground leases. So these would be ADUs built on residential properties the way I described, and but would be owned in part by Dweller, but also by investors who come in as part of this crowdfunding campaign. And to to kind of make the offering more complete, if you will, we are transferring all of our existing ADUs into the same portfolio. So anybody who invests in the campaign is basically investing in an existing portfolio of ADUs plus any new ADUs we built, and all the cash flow and returns that come from that are part of this portfolio for the investors in the offering.
That's just super exciting. It's an easy way for people who want to be involved in it to get in at a very small increment, right? What are the minimum investments on the campaign?
$1,000.
So you get in at $1,000 and you're part of the movement, and there's already a bunch of units that become part of that portfolio that you're invested in, and you're contributing to building the next 8 or the next 9 units.
Yeah, the next 8 units. Yeah.
That's cool. And then you're getting something back for the money you invest, right? It's a real investment into Dweller or another entity.
Yeah. So the entity that's raising money is a new special and created for this purpose. It's called legally. It's called the Dweller Affordable ADU Portfolio LLC, and so it's just set up so that, once again, all the ADUs are owned by a single entity, and the ownership of that entity is solely by the investors in the campaign, and Dweller, the contribution that Dweller is making through these existing ADUs. It's still a Dweller managed portfolio, so we still play the same role in developing ADUs and in managing the ones that are in the ground, but legally it's separate, so that's a clear segregation of where investor money is and where the assets are, where the ADU is.
That's cool. That's cool. It's you've thought it out.
All right. I never do this, but I'm trying something new. We're going to resume the interview in just a second, but if you're watching still, you must be getting some value out of this. I get to do these interviews with people like Patrick because I have an audience. That's you. If you can like this video and subscribe to the channel if you're interested in getting more accessory dwelling unit information, that would mean the world. I'm already grateful that you're watching the video, but a little like and a little subscribe, those help the channel grow, which will eventually let us solve the housing crisis together. All right, back to the show.
And if people want all the information, it's all like in financial disclosures and things on that Small Change website.
Yeah. So yeah, we really probably are kind of up to the line of what we can talk about right here. And so the best thing for people to do is go to Small Change. Smallchange.co is the website, and the project is listed under affordable ADUs, and yeah, it's fully there's full disclosure. You can download a full information packet, and then you can see the other specifics on the offering, and it talks about investments and things, the investment minimums and things like that. So it's depending on people's interests, it's a good read. It's like, even if I encourage people to take a look at it, but even if it's not, you're not sure if you're interested in investing, I think it does kind of talk about the economics of this type of model for developing ADUs, right? You can think of ADUs as a real estate asset that can attract private investment, that can generate cash flow, that kind of thing. I think that's part of where we need to get to with ADUs is they're now kind of in this bucket of, it's like an addition to your house. It's in the home equity loan kind of conversation, like, oh, homeowners go and get home equity loans to tear down their garage or to build an addition onto the house or an ADU, and we think of them as new housing units that can be used as rentals that generate cash flow and return, like any other real estate investment, and that's part of the business model that we've created.
Can you talk about returns on this, or do you want to send people to the?
I can't. That's the kind of thing that people really do have to go to the disclosure. And
Yeah.
it really is, it's investment, right? It's the disclosure on it is, it's definitely an investment, and people need to consider it in that way and think of it that way.
That's it. It's not casual. It's big boy stuff. You
Yeah.
gotta do your due
To
diligence.
think about the risks and weigh those and make a decision, right?
That's it. And as a big, I think what I can say is I'm really excited because I'm doing a lot of different things to get involved in accessory dwelling units, both helping people build them, but also thinking about building my own one day.
Right.
It is a big investment, and this is actually an opportunity for me to get some skin in the game, which to me is very exciting. And I think that's not something that's on the prospectus, but being giddy about it, investing a little bit is a very fun side benefit to all of the stuff that they can find on the small change page.
Yeah, I mean, but obviously people invest for all different reasons. If you look at the projects at a place like Small Change, there is definitely a theme of them having an impact in some part of kind of urban neighborhoods, whether it be affordability or housing supply or commercial affordability. So it is definitely the type of project that we know that people who take this seriously are people who care about not just the housing issues, but they actually care about ADUs as a solution. And I think this is an important model for people really to think about. One of the ways that we talk about it is the places where ADUs have become legal. There have been lots of projections made about how many ADUs are going to get built, and in California is a great example. I mean, people talk about hundreds of thousands, if not a million ADUs being built over some time frame. We don't think that happens without some type of scalable business model that takes it out of the hands of one homeowner after another homeowner going through this gauntlet to develop an ADU. To get to those kind of numbers, you need to have business models that can build 10, 20, 30 at a time, or even more. And we, as one example, we hope there's going to be others that develop in the coming years to make this a reality. So anybody who cares about ADUs and is tracking ADUs as a big part of the kind of housing strategy for their community, I think should be thinking about this opportunity, because it is an opportunity to prove it out as one of the models we need to really scale ADU development.
That's absolutely it. I've got a few questions that I think I run into a lot when I talk about ground leases or crowdfunding. And so if you don't mind, we could just rattle through a few of them in the remaining time. Yeah. It gets a little less aspirational now. It's like, so why go crowdfunding at all when there's why not go to a bank, or why not go to institutional investors in this case?
Well, I think it's most people understand that traditional lending happens in a very regulated way, and it happens within particular boxes that have been kind of drawn, and it's really difficult for lenders not just to understand and figure out how to lend to different businesses or different assets like ADUs, but they don't really get rewarded for it, right? So it's just an uphill battle for them to if you make a loan, then you're gonna have an auditor who's gonna come in and say, "What's this loan?" And you have regulators who do the same thing. So not only does the banker or lender have to get smart about ADUs, but they have to help other people get smart about ADUs in order for this not to be a headache from a regulatory standpoint, not from a risk standpoint, but from a regulatory standpoint. Like, they just have to explain it over and over again. And so the path of least resistance becomes, let's stick with what we know. And so there's that. And then, it's a different kind of an investment. So let's just say we're talking about investors, traditional investors, people who invest in real estate projects. Most real estate investors, it's a decent gig. I realize there's cycles, but you get land and you get the building and cash flow from the building, right? So you think about it, it's like the classic belt suspenders thing. And we don't have an interest in the land. So it's far more of a straight up, like, I have an asset and it generates this kind of revenue and this is the return you get on it. And it has some residual value for sure, but it doesn't have that extra boost from land, right? So from an investor standpoint, it's kind of a little same mentality. Like, I get it. It looks good. I can see where the returns are, but it just looks different enough that, I'm gonna go somewhere else. So, it's not like we haven't tried to educate both lenders and investors on this, and had lots of conversations, and we will continue to do so. But we believe that right now, the most receptive audience for this type of business model is kind of everyday people who aren't tied down by this traditional way of thinking, but see the housing crisis every day in real terms, and they say, I get it. Like, I get it. That backyard's not being used. That ADU's rented. That, yeah, I know what rents are in my neighborhood. That makes sense to me. So I think it's definitely a underutilized place to attract investment. But we're at the beginning of this movement. I'm just learning myself, but there's all sorts of new regulations out around crowdfunding. It may be that money flowing in from kind of everyday investors begins to dwarf what we see in traditional investing. So we'll see. It's kind of like, we're going to learn how crowdfunding responds to this, and we're going to learn about this business model. So it's a fascinating time to be doing this. And I'll just finish with one more thing on this. Part of what we hope to do is to be able to say, with a good portfolio of ADUs that benefits, people from the crowdfunding side, is to say to the traditional folks, like, see, this is not what you think it is. It actually is far more of a predictable investment. And so that's part of it. It doesn't mean that, that we're asking people now to take more risk. We just think that this is an opportunity for folks to come in and help prove this out, to get to the next scale, however that happens.
Mm-hmm. Yeah, that for people who watch the channel a lot, they probably know this, but I'm a wine guy before housing, and we were crowdfunding winemakers up in your neck of the woods and down here in California, and went the crowdfunding route for Fine Wine Bond, and it was radical that how much that opens everybody's eyes to the potential of changing the investment strategy. And
right, yeah,
that's cool. That's exciting. I get giddy about crowdfunding almost as much as ADUs, and so it's good to see somebody really taking the channel seriously and investing so much energy into it. I think you mentioned one particular thing that investors say, hey, well, wait, you don't have any interest in the land. You're only doing the building asset. That's a good segue to one of the other questions, which is, why do this complicated ground lease mechanic? Why not just buy whole properties and develop the ADU once you own the whole property?
Yeah, I think that's a good real estate strategy as well. We think ADUs would boost the return for any single family rental portfolio, particularly if you find a way to develop ADUs at a cost effective, predictable way, right? I mean, if you buy West Coast number, if you buy $500,000 residential property to use as a rental, but throw a $300,000 ADU on there, I don't know that that's boosting your return. But if it's a $120,000 ADU, like the kind that we build here in our market, then I think that you definitely are adding given rent. So I think it's a good strategy. It's far more capital intensive. In some respects, it's a different, and I think it limits the pool of properties to build ADUs on. Ultimately, our goal in our business model is to build ADUs. So we'd rather focus the capital that we raise on building more ADUs rather than buying existing properties and then adding ADUs. we both operate in markets that are relatively uh, uh, tight, and so there's not a lot of deals to be had. So I'm not sure it's the most capital efficient strategy at this time. There may be other parts of the country, but here on the West Coast, I think that it's more capital efficient to be investing in ADUs directly rather than buying the single family properties and then putting ADUs on them.
Yeah, and so sorry to like put that in layman's terms, it's like it's hard to buy houses right now, right? Like
Yeah.
you go out and you put 10 bids out, and
Yeah.
maybe you're the top bid on one of them. Certainly where I'm at, you hear that all the time in the news. Everybody, the housing market is just crazy right now. That's what you're
Yeah.
talking
And people who are buying, homeowners who want to buy a house to live in, they're gonna have a different mental calculus. So you can't get, so they're gonna probably outbid an investor because they're not looking for the same return. So yeah, it definitely, if you imagine, just get back to the early thing, if you imagine 100,000 or 500,000 ADUs being built, a big percentage of those are going to be built on investor-owned properties, meaning that single-family properties that are already rentals. So it's going to happen, and I do think that those are properties that are well suited for ADUs because they're already rentals. So, for whatever people say about the benefits of ADUs helping homeowners, and there are substantial benefits from a housing supply perspective, we want to get more ADUs built, period. And homeowners go through a different decision making process that's not just financial. It's, do I want somebody living in my backyard? Investor owned properties, they already have a rental in the main house. They don't have the same kind of psychological hurdle to get over and putting an ADU in the back. They basically have taken a single family rental and turned it into a duplex rental. And so I think you're going to see a lot of those get built. It's not like it's not going to happen. It's just not the model that we're focused on right now.
Yep. All right. And then so taking it from the other side, if somebody's already open to real estate investments and crowdfunding opportunities in real estate, what do you think they should know that to encourage them to get an affordable ADU specifically compared to other crowdfunded real estate opportunities that exist out there?
Well, I'm certainly, I think that there's lots of good projects, and so I think some of it is really personal about what matters to you. If you look at an impact crowdfunding site like Small Change, the platform that we work with, all the projects have a particular benefit to them. That's part of what Small Change does. They can demonstrate the impact to you. So some of them are local, right? So this is particular communities. So I think it matters. So I do think that's probably going to be the biggest differentiator, is what really moves you in terms of what impact you want to see. And we think that this is both housing supply, affordable housing, but also proving out the ADU model. Without being kind of pluses or minuses, I will say one of the interesting things about an ADU portfolio strategy is versus a single project strategy is when you invest in a single project, you're investing in a particular location, right? So everything is tied to that particular thing. And if you've got 8 units or whatever, it can do perfectly fine. But whatever market forces drive the success of that project, it's all one place. If I build 8 ADUs and they're scattered around the city of Portland, right, I can have an issue in one of those units, whatever it is, rents go down, and I got 7 other units in different locations. So there is, I think, a little bit more of a diversification, if you will, right? It's not 8 units in one location that can go up and down together. It's 8 units dispersed, and they can even each other out. Rents can certainly average each other out. So I think it's one of these things where ADUs are so new as an investment strategy, particularly at scale. ADU portfolios are absolutely new, that I don't think people have really internalized. Oh, like, would I rather buy a portfolio of 20 ADUs or a 20-unit apartment building? Like, I could make a strong case why you'd want the 20 ADUs, but I don't know that there's a right answer, as much as it's like, this ADU portfolio thing, people need to start paying attention to it, because I think it offers a different way of managing risk in within markets in rental properties.
That makes a lot of sense. It's a little different, so there's some unknowns.
Yeah.
But at the same time, if people are looking for things that are different,
Yeah.
because they want to have a slightly more diverse portfolio, or just the diversity of having 8 units in separate places,
Yep.
that's an asset in and of
Yep.
itself sometimes.
Yep.
So that's really interesting. And then I think this is one I hear a lot of people. It reminds me of Airbnb in the early days, where somebody would say, "Who's gonna want to rent out a room of their house to a stranger?"
Yeah.
And this is a ethically, it's a very different business, but that one part is very similar, where it's like, who's gonna want to put a house in their backyard and rent and let another company rent it out to a
Right.
stranger?
Yeah.
And
Yeah.
I just face a lot of skepticism about that, and I don't have a lot of experience in the space, so I'll leave it to you. Are people up for this?
Yeah, absolutely. So, when we first started the business, this was obviously a big part of the business model. And so, like any entrepreneur, hopefully before you take the leap, you ask around. You're like, am I thinking about this correctly? So, I did that. My business partner did that, and that was the biggest question that anybody who I talked to that I trusted. I was like, hey, we're thinking about this. Does this make sense to you? And universally they were like, nobody is going to let you operate in their backyard without any really control for $350 a month, which is kind of the net that people get here in Portland. And so when we first started out, that was in my head, like I gotta make sure that this is viable. So you just start talking to homeowners, and you know what? That's like that's not an issue at all. Like that is one of the lowest obstacles we have. So yeah, people have a lot of questions, but by and large, we're local, so it's a particular population. Portland has its own unique characteristics, but by and large, the folks that we talk to who about the ground lease are smart. They're informed. They do their research. They don't do. It's not like they're going pulling out real estate law books, but they understand the ground lease. Like it's not like they don't get what we're doing, and at the most fundamental level, they understand this trade-off, which is I want an ADU. I have a long-term goal for the ADU, and either I can't make it happen right now for whatever reason, or I just don't want to put my money at risk right now. I'll let these guys do it, but eventually I'm going to get there, and this is a path to get there. Like that basic way of thinking about the ground lease, that just resonates. I mean, people get it right away, and so it hasn't been an issue, right? It's so for us, it's like, does the property work? Can we install the unit? Like, there's all these logistical challenges. So, and if I talk to 100 homeowners, 20 or 25 are going to say, get lost. I don't have any interest in talking the ground. I would never let you, so it, and that's a real number. Like, that's not like, because we've surveyed people in addition to that. So, like any product, you're like, I don't need to waste my time, with any marketing, those folks. But within the rest of the population, they all get it. And so they're all just trying to figure out, is it the right deal for them and whatnot. So it's a different dynamic than we actually thought. And, that being an issue up front, it's just kind of wrong about. And, I think if we were to be able to have a long-term scalable capital solution to fund these ground leases, I don't know that we would have a problem with demand.
Mhm.
But it'd be nice to get to that place.
Sure. Perfect. And then I think another amount of the skepticism in people's heads is, well, hold on. One of the reasons why people will be skeptical is because whenever there's financing, there's a risk that you lose your house, right? Like you're giving part of your property to somebody else. Can you talk about how you approach that and like
diffuse that problem?
Well, first off, we're not taking an interest in the property, so we don't have that right. So we are betting on the property and the homeowner, and um, so to the extent that the homeowner has issues with their existing mortgage lender, we believe that we're in a position to help that homeowner work through that. We're new enough that we haven't been through foreclosure, meaning a homeowner that we're working with hasn't gone through foreclosure, but we imagine it'll happen obviously at some point in time, and our goal with that is to be a part of the solution, because what we will say to both the homeowner and the lender is there's an ADU sitting on the property here, we're managing it, it's rented, that's income. Let's, like, this isn't black and white here. We have, the homeowner for whatever reason might be behind on payments or whatever, but there's income here that can help solve that problem. And as a lender, do you really like this property is worth more because this ADU is on there, and let's work so we think that there's more pathways through foreclosure with an ADU like this that's professionally managed than without it. But we know that there's risk involved there. Even if we had an interest in the property, though, if we said we're going to have a second mortgage, which is what most home equity loans have, we still don't drive the truck. We're still dependent on the first mortgage lender. So we're in this position in which, in some respects, we're going to wait and see how the others perform and be part of the solution, like I said. So that's really the way we think about it. But we don't we're not going to be in a position to basically tell the homeowner that you you know you we're taking the property, or you got to sell the property. That's not a position that we'll be in, or a legal right that we'll have.
Yeah. And then if it happens to them because of some other lender on their primary residence, you think dweller's in a good position, because that lender or whoever owns the house, they want income from the
Yeah. Yes.
they want
Yeah.
the ADU to
Yeah.
reach its full potential for
Right.
them.
Yeah.
That makes a lot of sense.
And just a reminder, like, we own the ADU, so it's a strange concept, but it is backed up in our legal agreements. It's been recognized here locally by, like, the the tax collectors. So we own the ADU. So we uh, so so in some respects we control that rental income. So we have that as a way of contributing to whatever issue the lender has on the property.
Okay, I've got kind of one more sort of skeptical question, and then we can end on a positive one if you have time for two more. Yeah.
Yep.
Cool. I think it's been a pretty crazy year, 2020, when we're filming this. We're the day after the election, and I think there've been a lot of conversations about the housing market, about rent freezes. Portland in particular has had a difficult year for a number of different reasons. Do you want to address any of that, given that so much of the small change portfolio is in Portland? Do
Yeah.
you comfort people or appraise them of the risks that do exist in your mind?
Yeah. So, yeah, the current situation in Portland is uh, we both, like a lot of places, we had a moratorium on evictions. So which really meant that you kind of have a no people could ask for rent deferrals without any cause, and so you had that risk. And then the second piece of it was, um, just recently there's a temporary moratorium on increases in rent, um, which right now we would who knows, right? Obviously the pandemic stuff is getting worse, not better, but it's expected to sunset either in January or sometime early 2021. So we would expect that environment to be kind of in place. So so we do have, we're constricted in terms of increases in rent. What we have found, and probably should have highlighted this earlier, is that we naturally achieve affordable rents that come in at a rent that's affordable for households at 80% of the kind of median income. The and so we're not, so the portfolio works at an affordable level, and these new units we want to add, we want to maintain that 80% rent level. So we expect rent increases long term, but we're not dependent on kind of hitting top of the market for this. So we know that the rental dynamics in this market are strong, and we know that uh, we know what we need to achieve, and so we know that we have room to operate within that, even if we're within this kind of constrained environment. We had a couple of leases come up for renewal early on in the pandemic. People wanted to renew, and we renewed with no increases in rent. We had a couple turnover. People wanted to move, and those, when we put them back out the market, the rent went up actually. So the overall these are longer term units. The overall rental dynamic is still very strong, and I think our commitment to keeping rents affordable is probably the more important point here than whether or not we can keep hitting top of market. It's that opportunity is out there. We're trying to, like I said, be part of the solution on the affordable housing side.
Perfect. And then that kind of makes a segue to the softball, which is what's the pitch for just ADUs being a good investment? I think the affordability that you're able to offer on rent means that they're full a lot. Is that accurate?
Yeah, I mean, I like I said, I think it is a very tangible solution to the housing crisis. People can see it in their neighborhoods. They know that these are cost effective. They fit within the fabric of neighborhoods. And so, how often do you get the opportunity to put your own personal money to work in a tangible solution to the housing crisis? I just I don't know that there are very many options available, and you're going to see incremental housing units built through this. And so it just, from our perspective, it feels so real for people who care about this issue, and the cost to build an ADU, it's one of the lowest cost forms of housing. So from an impact return perspective, it's hard to do much better, because for every dollar you put into this, more of it is going to a full housing unit than other forms of housing. So we don't think that there's other forms of housing that offer that same kind of real, kind of tangible impact. And like I said, obviously people can go to the small change site and look at the economics and the return potential, but we think it's a rare combination of that kind of tangible impact and financial return. And we think it's ideally suited for everyday folks, right? Folks who can't invest in the big apartment building tower downtown, but they can invest right in their neighborhood.
I love it. I'm gonna be doing a follow-up, I think, where I walk through some of my thinking around it, and maybe I'll be allowed to talk a bit more about some of the things, because I'm not making the offer, right? But some of the things that I think through, but approaching it as a personal investment, and doing my due diligence and sharing it with anybody who's interested. And I just hope that you grow and make all the impact that you are trying to achieve.
Thank you. Appreciate it. Yeah. And, we obviously, everybody can go to the Small Change website for information on the offering. People have any questions about our business model or the units and the neighborhoods we work in, we're always happy to answer those questions. People can go to dweller.com to learn how we do business, and to drop us a message.
Perfect. I'll put links to your website and Small Change in the description below this video if it's on YouTube, and somewhere in a comment section, regardless of what platform people have found this on. And I just thank you so much for your time. As always, Patrick, you're a fountain of information. And I earnestly hope you the very best on this project. It's very exciting.
Thank you, Ryan. I really appreciate you featuring us.
Now, if you liked that, I loved it. And I can do it thanks to subscribers, right? So if you liked it, like this video and subscribe to the channel if you haven't already. Share it with a friend. Do you know somebody who's been talking about investing in real estate or looking for a place to put their money other than the stock market? I'm not going to be able to tell you if this is right for them, but it'll be interesting, right? And they can follow the link in the description below the video, and they can do some due diligence and learn about this investment opportunity. Maybe it's something that they'd really be appreciative of. Think about sending it to that investor savvy friend.